Hi there, this is Sandra with the Mortgage Center. Another message for the people who want to hear this message. As you guys know, I'm the principal broker and we love helping people. I just wanted to share with you some of the trends that we're seeing in our office, really just to kind of help you understand what's happening with the mortgage market and what's happening with interest rates. And I've had a few clients recently ask me, is alternative lending a good vehicle? Should I actually go into alternative lending? And we have, I would say, probably 40% of the clients that we work with require some sort of alternative lending. And so when I say alternative lending, it's not prime lending. So as a mortgage broker, we do mortgages for TD and Scotia, for example. We also do mortgages for most of the wholesale banks. But alternative lending is a bit of a different type of lending. And I'll tell you a little bit more about why many of our borrowers require alternative lending. And I feel like it's a good option. It's a good transitional option. And the reason why they require alternative lending is typically not because they have poor credit history, but it has to do with how mortgages currently require, how prime lenders require that people qualify for a mortgage. So right now, for example, a good rate for a 5-year fixed rate mortgage is about 5%. But government regulators have asked that if you're getting prime lending, you have to qualify on a rate that's 2% higher than the contract rate. So let's just say if we look at your budget and you're like, yes, that makes sense. That monthly payment based on a 5-year fixed rate is good. The mortgage payment that people have to qualify on is 2% higher, so at 7%. So when we look at the debt ratio calculations, which is the monthly carrying costs on the house versus versus your gross income, the payment that we have to use is the payment based on 7%, not 5%. So I know this isn't too complicated for you, but I wanted to spell out these details. So this is what's required from prime lenders, but with alternative lenders, they are regulated in a different way. So most of them are credit unions or some non-credit unions, monoline lenders are still highly regulated, but have a different criteria for how they approve mortgages. The rates are slightly higher, and there are sometimes fees, and those fees can often be built into the mortgage. But what happens is because they don't have the same stress test requirements, the borrowers can often qualify because we've already had a conversation around, okay, well, what is your ideal mortgage payment? So, just to answer that question that we started with, does it make sense? Do these alternative lenders, like, is it safe? And yes, because they are highly regulated. And there is alternative lending that we do, and we often do private mortgages. Many of you may have had a private loan from us at one point or another. And private lending is just another good type of transitional mortgage, sort of based on your financial circumstance. So I wanted to let you know that if you have friends or if you yourself have been declined for a mortgage, there are always good options, and we love helping people. One of the first thing that we will always ask you, because you've probably already kind of gone through a couple of options, one of the good things that we will ask you for is a simple mortgage application and some income documents, so that when we actually meet, and we are meeting all of our clients online, we actually have some good answers for you. So this is my message for you today. Please reach out if you have any questions or would like our help, because we love helping people. Okay, have a great day and stay in touch.